Good afternoon, Bob Dalton coming to you from Allendale's trading floor here in McHenry, Illinois. It is Monday, March 15th, the Ides of March. Today we came into a higher dollar and some cheaper crude oil up on the board prior to the grains opening up. That dollar due largely in part to the fact that both China and India are looking to curb inflation in their countries, and rumor going around that India may raise interest rates to help that idea along, and China's doing what it can to curb economic growth. There's a lot of people out there that can't afford to eat very expensive food, and that's what they're trying to curb against. So the U.S. dollar, of course, rallied off of that news, and currently the electronics are trading up 44 at 80.51.5. You know, that is a bearish spin as far as an outside market consideration to our grains today, and we consequently saw lower grain prices in both the corn and the wheat today. Wheat was down 6, 479.25. Corn down 1 at 363.25. While the soybeans enjoyed a higher day, we were up 4.5 in the beans, which is not a very large move for a soybean contract. Corn staying above its February lows. We haven't traded down at that 59 price point in the last week. So that low is holding. Wheat, today I watched the Kansas City July contract trade a couple ticks below its contract low, closed up above that low by half a point, or excuse me, a full point. So we are testing some significant support levels in wheat market, corn market. So far we're holding. Talk today, midday weather. The GFS model came out with a 6 to 10 day forecast showing us that there's a possibility of snows accumulations totals between 5 and 10 inches to be seen over most of Iowa and the southern half of Wisconsin. We should see that in the next 6 to 10 days. So that lent a little support to the grain markets, corn specifically, right around 11:30, 12 o'clock today, and they were able to hold on to only losing a penny off of the much stronger dollar. Crude oil down $1.45 in the electronic market right now at 79.79, trading below $80 again in the crude. So the outside markets were pretty bearish again today for the grains. They should have shown a lot more pressure on the grain markets than they did. Grains are holding support right now. So for those of you who don't have hedges on, for the time being, you're okay. We break below these levels, you're going to want to get on the phone and call us right away and get some downside protection on. Over to the livestock market, cattle enjoyed another day higher here today. We are seeing just significant amount of buying coming into the cattle market. This is all fund induced. 95.65 is where that April cattle contract settled today, up 55 cents. Your nearby contracts are seeing significant gains, where your more deferreds are kind of going right along with it, but at nowhere near the rate that your nearby cattle market is trading, and that's telling us, of course, this is fund interest. Open interest is up in these cattle markets. Volume is up in these cattle markets. They're going to continue to go higher until these guys pull their money out and go home or put it somewhere else. So for those of you looking to hedge cattle, give us a call. We'll be more than happy to talk to you about some strategies and go from there, lock in some profits for you. Just remember, as quickly as this market goes up, when these guys do say they're taking their ball and going home, they will come right back down just as quick, if not quicker, because a lot of speculative money jumped in right along with them. We can see all that come out real quick. So make sure you're getting your profits locked in, or you're selling your cash as needed. At these levels. Feeder contracts down 10 cents in the March today. 102.90 is where they finished up. We did go and test that 103 high that we've seen in that March feeder contract, finished just below there. And the hogs today, 71.80 is where they finished trading, down 85 cents. April hogs. If you have any questions or would like to talk to a broker regarding some of our reownership strategies that we're getting in now for the corn in anticipation of a springtime bounce, the hedges, we still have lots of hedge ideas out there. Those of you who waited in December and January and said, I'm going to wait and see what happens with these grains before I get any protection on. Well, if we fail below these support levels that the corn and wheat are sitting at right now, there could be a significant pullback ahead of any type of springtime rally. And that's been the one question I've been asking people anyhow. What are you waiting for to get your hedges on? Well, I'm waiting for the springtime bounce. Well, if these support levels fail, where are we going to be bouncing from? Are we going to be back down to 325 in the nearby corn market before we get a 50-cent bounce or a 30-cent bounce, however much they want to give us? Where's that going to put us at? 30 cents from 20 is still cheaper price than we're seeing on the board here today. So give us a call, 800-262-7538 is the number, or visit us on the web, www.allendale-inc.com. Have a great trading week.